Well, good morning, Jagender Rana here. The new topic for the discussion today is insurance frauds doubled in India. Insurance frauds doubled in India. In India, the incidence of insurance frauds has doubled. According to the Ministry of Finance, in the year 2024, there was a loss of rupees 1.77 billion in the incidence of insurance fraud, which is double the previous year compared to 2023. Recently, incidents of cyber fraud in India's insurance sector have been steadily increasing. As a result, people have suffered huge financial losses. Meanwhile, the finance minister recently held a review meeting with all state-owned insurance companies. In the meeting, the finance minister directed the companies to come up with the insurance plans that cover risks like cyber fraud. So, stating that necessary changes are being made by the customers in the insurance sector. The need for companies to bring new schemes in the market, keeping that in mind, she also directed to bring cheap insurance plans to increase the insurance coverage. Companies should keep in mind the needs of the customer. Customer complaints should be given priority. The Finance Minister advised insurance companies to connect with the customers through social media. Artificial intelligence should be used to make companies more efficient. A large chunk of about 52,500 complaints received by the insurance ombudsmen across the country in the financial year 2024. They pertain to mis-selling and misrepresenting policy terms and conditions and issuing a policy not conforming to the proposal under section 13(1)(d) and 13(1)(g) of the Insurance Ombudsman Rule. More than 70% of the complaints were against life insurers under the two sections. After life insurance, health cover related complaints follows the list of grievances. The RDAI separately received 2,15,569 grievances in financial year 24 on its Bima Bharosa portal, of which 1,20,726 were related to life insurance and 94,843 to general insurance, largely health covers. The majority of the complaints were against public sector entities in the life segment, while most non-life complaints were against private insurers. So, insurance-related grievances were among the 2,96,000 complaints that the Office of RBI Ombudsman received in financial year 24-25, compared with 2,93,000 in financial year 23-24. RDI, in its communication on such mis-selling to lenders, flagged numerous instances of an insurance policy being forcibly sold or missold by the banks and NBFCs by building these with the housing or other loans, by bundling these with housing or other loans. So, for availing a locker facility, lenders insist on purchasing an insurance policy and at times claim that it is mandatory. So, insurance plans have also been issued without the consent of the customers, and there have been cases where customers claim not to have signed the policy documents or that they were issued policies with incorrect contact details. So the insurance regulator found that single premium insurance policies have been issued in lieu of fixed deposit receipts, claiming that these will provide better benefits. Senior citizens have been sold long-term life insurance policies having higher premiums even though they may not require such coverage, and regular premium policies were issued in place of single premium ones, and renewal premiums were debited from customers' bank account without any intimation, so assuring that they would get double the payment after a certain period. In most cases, when a complaint is lodged, issues are resolved and the premium is returned in a few cases. Still, that has not deterred mis-selling by financial institutions that act as a corporate agent for insurers. Curbing mis-selling has become a key priority for banks, insurers and the regulators, with several targeted measures being undertaken. Insurers are simplifying products, strengthening onboarding with video verification, and enhancing disclosure to improve transparency. Sales teams are being equipped with digital tools for suitability checks, while incentive structures are being aligned with long-term customer outcomes. So IRDAI has further reinforced these efforts by extending the free look period of 30 days and enabling video-based identification. So eliminating mis-selling will require concentrated efforts across all stakeholders to build an empowered and informed customer base. So it is pertinent for every bank to instill values of integrity and probity in the sales staff and relationship managers, so the customer's interest is put at the center and not the sales or growth targets. Governance across these lines is must now. Reason being, defense, especially awareness at the governance across these lines of defense, especially awareness at the operating level, needs to be strengthened to reduce the frequency of mis-selling insurance. So, mis-selling and frauds both are increasing at a very rapid pace. The incidence of insurance frauds has doubled. There was a loss of 1.7 billion in the incidence of insurance fraud in the financial year 2024, which is double the previous year compared to 2023. So recently, incidence of cyber fraud in India's insurance sector have been steadily increasing. As a result, people have suffered huge financial losses. Meanwhile, Finance Minister held a review meeting with all state-owned insurance companies. So she warned and she advised that cover risk like cyber fraud. Necessary changes are being made by the customers in the insurance sector. There is a need for companies to bring new schemes in the market, keeping that in mind. Cheap insurance plans are required to increase the insurance coverage. Companies should keep in mind the needs of the customer. Insurance companies have to connect with customers through social media. Artificial intelligence should be used to make companies more efficient in these times of advanced technology. Thank you very much.